right, Yana, thank you so much. Thank you for Morgan for such a great event. First time here in the Trading Pub. And thank you everybody here for putting up with all the hours. I know how it is, as I've been doing all those hours as well, try to make the market work, so to speak. All right, so once again, I'm going to try to be brief. It's been a while since I do a real in-depth training. I prepare something that I believe is going to be instrumental in terms of teaching, which is my base foundation of what I do right now. So I'm going to, obviously, a disclaimer. I mean, I know this is overrated already. You already know that we can lose a lot of money and all this stuff. So that's all with the CFTC stuff. So here's what it's in for you today. I am basically going to be teaching you as much as I can for the sake of your time. We got about an hour 15. So I'm going to try to push and squeeze small nuggets that I pick up through the years of trading. I specialize right now into the futures market. That's my main forte, but I created a specific system for other persons and clientele as a consultant to create trading strategies and system for them, meaning that they have their own ideas, so you might already have, and I try to improve them by using pure price action analysis individually or specifically created for each market that you're going to be trading. So today I'm going to give you away a few of my most reliable trading strategy that I've redefined over the around 20 years, and you'll see it in a moment. So you can actually implement it immediately on your trading strategy or techniques that you already have. So it's something that is going to be on top of what you have, okay? So most of my students has applied these simple, powerful techniques to improve or create their own trading styles and achieve trading success, all right? So I really want the same thing for you. The most important thing that I want you to understand is the markets are, all of them are pretty much the same. We're just reading a chart. I'm talking about technical analysis here, standpoint. But the truth of the matter is that everything is 100% based on how to read the market. You need to interpret it correctly based on what you're trading. In that point, you need to understand the market that you are trading first, learn the ins and outs of it, which I'm going to teach you, and then you apply whatever you need to apply on top of what you already know about the in and outs of that specific market. So it's like learning its character and, learning dance with them and apply our strategy with it. So this webinar, I'm going to teach you how to easily get started on forecasting the market, which is my specialty. And it's exactly the same way that I usually do. I'm going to reveal my favorite strategy. I call it the pivot step. It's a basic dynamic way of learning how to read the market. It's pretty much very effective. I've been using it for specifically for the last 17 years. It is the base of my core methodology of predicting market movements on the futures market now. And I'm going to teach you how to use it and apply it just by glancing at a chart and try to call the most probable tendency and forecast the market within 5 minutes just by watching it. So I hope you really understand that. So then I'll walk you through the process of some charts, and you learn from that point on, as I'm going to show you a live chart and apply it in real time right there. I'm not going to be trading. I'm just going to be teaching you. So that's my focus today, is to teach you as much as you can in terms of how to apply this price action activity on top of your stuff. All right, so before I go on, I'm going to be very brief. I want to show you a little bit of my background in probably a minute or less. It's not much. This is myself and my family, so I'm a real normal person. I'm not a guru. I'm certainly not a market maker, although I've been trained by 3 of the top market makers and hedge fund managers. I've been blessed to that. It cost me a lot of time and money. So, but I'm just saying that I happen to pay my dues in terms of learning how to make my dream of living from trading a reality. And even to an extent that I become a high-pay consultant for those equity traders, and you'll see what I'm saying in a moment, where they rely on my services to provide them a highly probability forecast on their on the markets that they're trading. All right. So in 1998, I was featured on. I got started on commodity. Once again, I'm just showing you to improve that I've been doing this for quite a while. That's basically it. And here's a group of Santander Securities stocks, stockbrokers, and market analysts taking a training with me. I was very young. I think I was 27 years old. I think so. And I started on commodities. So that's my main focus when I got started teaching people. So later on 2001, I moved into the day trading, the E-mini and the S&P futures market, and I was featured again when I was trading and teaching a little bit more high net worth individuals on how to participate into this monster of a market, which is the S&P 500. It's very, very neat, and it's a very, very lucrative, highly as well trading market. All right. I also in 2002 happened to take the license 3 as a license by the NFA futures market. All right. So I worked with Chicago. I mean, in Chicago with the Lakefront Futures. Nick and John are the owners of it. So no, I'm not promoting them. Just want you to make sure that if you got any doubts, you can just call them and let them know that Carlos Diaz probably sent you to see if it's true or not. And here's the test that I passed a Series 3. So once again, all this is to prove you that I literally went through all this process, and I had just small little steps of success that what I'm going to teach you today, it's really valuable because it's been helping me tremendously and my students. All right, so on with the training today. So a few key elements, and let's get started with this. The first thing that I want you to, when you start trading, that I want you to focus is always, and I know how many people just missed this out, always check for the news releases on, if you're trading Forex, you need to know where the high impact new releases are coming in before taking any positions into the market. You don't want to be caught up in the middle of a highly impact news, being on a profit for, you know, holding a position because you're on a profit, just to find yourself giving back most of those. All right, so that is absolutely basically the first step to do, which is on our step-by-step process that we go into 7-step that I follow every single day. First thing, check the news releases. Then you need to check the ADR and ATR, that's the average daily range. I'm pretty sure that most of you are familiar with it. Am I right? Are you guys familiar with the average daily range and the average true range, which is based on the bar charts that you're trading at? I'm pretty sure. If you can just, yep, that's it. There you go. So anyhow, all right, no, I'm going to explain that in a moment. Don't worry. All right, so the average daily range means, which is the momentum of how much points each pair, or in this case, let's just assume the bridge bound, which I'm going to explain, how many points they've moved the prior day or the prior session in comparison, you know, to the actual trading session. Let's say that, let me give you a quick example. I'm going to squeeze this over here. I'm going to go back and forth for a moment. And I have here the bridge bound and the average daily range. If you notice here, we have the period separators. I'm just using a simple MetaTrader because I think this is the most commonly used platform so far. So using the period, you know every 24 hours how the markets move accordingly, right? So the average daily range is you start measuring from high to low, right? How much points the market moved in the prior day. For instance, yesterday, the market moved from top to bottom, from bottom to top, in this case, 77 points. The prior day, the market moved around from the opening to the close, around 150 points, okay? And so on and so forth. You can go back in time, and then there's indicators here that they will just tell you the average daily range was, and it's easy for you. I want you to learn how to do it yourself, not relying on indicators and computer, because I, rarely use indicators at all. I use pure price action. And this is the first thing that I need to know, because based on what the market has done in the prior session, I most likely have an idea what the market will repeat to do the next day on average. That's what they call the average daily range. Now, the ATR represents the average true range. And true range means, let me zoom in and explain to you what that is. This is a 1 hour bar chart. Each bar represents 60 minutes, right? So the ATR, and there is indicators for this, but I usually try to count the last 4 to 5 bars on the back and try to understand what is the high and low of each one of those bars, so I have more likely an idea how many points the market has been moving for the last 4 to 5 hours. So that I know by the next hour, I have most likely the same ratio of movements. Does that make sense to you guys? Does it make sense? That, Don, that applies for equity, that applies for everything. What you're going to learn here, though, is you can apply what I'm going to teach you for everything. All right, so that's basically what the true range of the bars and the average daily range. The reason you want to know that is because that way you have more likely the beginning stages of Phil said last 4 or 5 hours average bar range. That depends on what you want to follow through, Phil. In my case, I usually go for 4 to 5. Yes, 4 or 5 bars, meaning that I can go to a 5-minute chart. Okay, just to give you an example here. Let me go here. Let's just take this 50-minute bar. And if I'm trading on a 50-minute bar, I need to know what the market has done in the last 4 50-minute bars. So I know by the next bar, most likely, what is the probable movement of the market in that area. So basically, I can count 1, 2, 3, 4. I just do the high and low, and I know that it has moved about 7 pips in the last hour or so. Meaning, let's see if this makes sense to you guys. If I place a trade, I know that I have an average of 7 points, either up or down, of movements, because it's exactly what it's been moving most recently. Okay, so this is very powerful if you are day trading. It is all the reason that I'm just explaining this to you, because most of Forex traders try to, day trade the market in a 5-minute chart, 50-minute chart. I don't recommend it. I use a 1 hour chart, less stressful, less likely to whipsaw, so on and so forth. But if you happen to do a day trading, by going into the average will give you the most likely probable movement that you're going to expect within the same exact amount of time on the last, in this case, let's see, 4 bars back on a 50-minute, it's just an hour. So I know within the next hour, it's probably going to move 8 points in any direction, whatever that is. So I would just wanted to share with you about the average true range and how you can apply it based on what to expect. Remember, I'm trying to teach you how to forecast the price movements. All right. Yes, Charles. It depends on the time frame they use, as the ADR is on a day. The ADR is on a day. ATR is based on the chart that you're trading at. Usually, my suggestion is going to be the chart that you're going to do in the main analysis. Okay. For the ES and the futures market on day trading, I use it, but I use it on the 5-minute chart, and I usually go with 4 bars backfill. All right. Now, I'm going to show you also, we're going to be applying symmetry, and that you're going to learn, that you're going to love about price symmetry. Here's the way you're going to be able to understand, let's just say, how many times have you found yourself placing a position, whether it being Forex, futures, commodity, whatever it is. And let's say that everything is pointing to one direction. You place your trade to find yourself into a pullback against you. Has anybody gone through that process more often than not? Yes or no? Abby, yeah, how many times, right? I know, it kind of sucks. I mean, it's going up, everything is pointing to one direction, and boom, you take a trade and it's just going against you on a pullback. Yeah, exactly. So here's a technique, and I'm just trying to go back and forth. I want to try to make the best time of your of the efforts that we're putting here. How to use what we call the symmetry, swing symmetry, using price symmetry, basic the amount of points or pips, depending on what you're trading, for most of the recent swings. I'm going to give you some sort of examples here. All right, let's just assume in this area. Oh, no, sorry. Let me go back. I'm just trying to come up with something here. All right, so I'm going to teach you the price action in a moment, but let me just teach you this stuff, which is powerful stuff as we speak. Let's just assume that the prices are doing the new low. I use an 8 exponential moving average and 34 exponential moving average. That's part of the system that I'm going to be teaching a little bit in a little bit now. But let's just assume that we have a new low position here. We're assuming that the market definitely is going to the downside. Obviously, it's advisable for you to, although we can just trade the breakouts, which is part of the system that we provide. I'm going to teach you. But what would be the best bet? Everybody knows the rule that supports, once it's broken, turns into resistance. So meaning if the prices break a support line, and let's just say that this is a support line, that blue line, and it was taken, you will see that the market most likely will try to take it back. Support turns into resistance just to find itself going, continue to the downside. Now, here's a trick of the trade that I learned. It's very powerful. I know for a fact that the market is going to pull back and then continue to the downside. It makes sense for me that if I'm going short, have enough discipline and patience to wait for the market to pull all the way back, right? And give me a better entry on the pullback, meaning that we're contradicting ourselves here because the market start going up and we're going to be sellers at that area, okay? So here's one way for you to forecast and predict where would that pullback will be without using any Fibonacci stuff or whatever. What we use is price action. And what I'm trying to find out is every time on the going backwards, I'm going of what I see in the chart here, how many times the prices on a downward move, like in here, have found themselves into a pullback and then afterwards continue to the downside. I can see a pullback here. All right, let me set this up. All right, so you see what I'm saying? This made a pullback and then continue down. That's good. So we have one. And then I see another one in here. So I got two in this area, so to speak. These two guys worked out for me. I got a small one here, but that definitely, it's just too small. So all I'm saying is, all right, so let's just say, let me just mark that bottom. And I'm going to project that bottom right there. All right. And this bottom right here. And I'm expecting the pullback, all right, to retest anywhere between those areas. So I typically, what I do is I create like a zone. We call it the synergy zone. And this is just part of one of my formulas for me to create a high probability pullback area for me to get in without having to use the other stuff. And you'll notice that I already know that prices most likely, based on what the market has done before, most likely will continue to the downside. And that would be between the price range, in this case, of 67.88 and 67.91. I mean, nothing is written in stone. Basically, what I'm saying, if they are going to do a pullback based on what they've done before, the most likely scenario would be that they are going to continue to the downside. And that would be a very professional way for us to be patient enough, wait for the pullback, and execute accordingly. Now, if that happens, and if that happens to be the pullback, how far down they will go? Well, I use, on the other hand, what we call the good old triangle formations. I mean, I'm using basic stuff here. So basically, I call this a pivot step, and pivot step means which I'm going to explain a little bit better in a moment. I'm just giving you the whole idea here. If indeed the pullback works out, they're going to continue to the downside. And what I try to do is I try to find a formation of support and resistance. And it's going to be like this triangle formation. And the width of this triangle will dictate the potential pullback, breakout after the support being broken here. So basically, let me try to explain. The width of this area are 33. Once again, how did I choose these 2 points? This is a pivot low, most important. The market went up, then made another pivot, went up, and finally broke this low here, pure price action. And I'm using those 2 as support, okay? And the break through it would be the entry of this trade towards the downside, and it has to be confirmed with the moving average. This is just in a nutshell the basic trading system. Very effective one. So let's say that we missed this trade, and we say, okay, can we get in now? Well, let's just wait for the pullback. We created, and we went back and found how many times we found symmetry of every time that the market moved down. Prior to the move down, they did this type of pullbacks. So we measured those from the actual bottom, and it gives us what we call this box right here, the reversal point. And I say, okay, fine. So that means that the width of this triangle is going to be 33 points, and they broke it right in here. They should move about 33 points. That means that they still have left about 67.57 is the target. There you go. A little bit more. That's going to be pretty much our target. So if we wait for the pullback and we find an entry, we pretty much are secure that the market is going to provide us with another 31 or 30 pips in this case. But if we enter a little bit lower like that, I cut it in half. I know that I'm going to have anywhere from 15 to 20 pips of potential. So let's see the result. The market pulls back. Let's see that if they reach that area. And I'm going to teach you how to use price action to get into the trade as well. So the market indeed pulled back, oops, in this bar right there. It surpassed it. That's okay, but that's pretty much what we knew. They were going to find some resistance, right? Are you following me so far? Now, the bottom of this bar will represent the continuation of the market towards the downside. So basically what I'm saying is the break of that low that actually touched a reversal zone that we calculated will cue in for our entry to the downside, and we'll use the most recent high as our stop loss, which should represent in this area. All right. So basically we're risking about 20 points to make about 24. And this is basically, let me eliminate this guy right here. This is our projected target to the downside. But now that the market left another pivot, I can go ahead and do the, as I'm going to show you here. It's a little bit more, wow, it's a little bit more dramatic, but it says that the movement could produce an average of 90 pips to the downside. If they break, let's see, 90 pips to the downside. If they break below that level, that will put us where? There you go. It should be 66.82. I'm not saying that it's going to reach there, but based on price action, this is on the longer term, this is going to be the target on the downside. So let's just focus first on what we have, and what we're using is pure price action, what the market has done. All right, so we already did this to predict this target. We already found the most probable pullback tendency. Very good. And we have the entry, which is the market that actually get into the zone. We use the bottom of that bar. I'm talking on the 50-minute chart here. The break through it will put us into the sell-off, all right, or the selling point. Let's just go a little bit further on the close here. And let's see the results in this. The market start coming down, coming back up. Remember, our stop loss is right in here, in this area. So we can certainly start using and dropping our stops as the swings are getting formed. Moving average still separated, pointing downwards. So the 67.56 looks good to be reached. And it looks like they're going to fail it. The market came back and touches out, all right, right there. Obviously, in this case, See, the market provided about 13 points of the expected tendency. Now, this is a 50-minute chart, okay? It's totally different than trading on the 1-hour chart, which I mentioned earlier that I use, remember? And the reason that I use the 1-hour chart is because I get less noise. Still, let's just see if price action indeed were able to forecast where they wanted it to go. And the different point would be is depending on the chart that you're trading at is the difference in how you're going to be managing your trades, okay? Because we're using price action. So in this case, the market indeed finally reached the target. You see it right there? That would be the complete nonsense of the information that we had before. The market indeed gave us where the market will most likely will go, and it depends on how we manage the trades. Remember what I said in the beginning, that you apply your own strategies and benefits. What I'm going to be teaching you is how to know most likely the areas into the future where the market most likely go, and you can apply correctly your money management, your techniques, or whatever it is that you find you guys have, because I know many of you have different techniques and strategies and indicators, so on and so forth. So, but this will give you like a roadmap of most likely where the market will go. So in this case, you notice here how the market from the pullback. Now take a look once again, how the pullback, if I overextend the pullback again, the right side, take a look how the market retested that pullback area that we found it based on this prior swings that the market has done from the pullback area, okay? Which are the most two similar ones prior to this one. And this is where we had like most likely the idea if the market will pull back. This is as much as it will pull back before continue to the downside. I'm just repeating myself here just to make sure that we're using pure price action. Afterwards, we use the original target pricing from the prior pivot and this two pivots, which I'm going to explain better right now for you to learn, and use the triangle formation. Once the market broke through it, they will tell you most likely the tendency for the targets, which was reached eventually in this area. Okay, let's see here. Phil, I'm going to explain to you in a moment. Yes, that's part of the system. I'm just giving you a rough idea of what to expect based on price action. I'm just giving you, in a nutshell, on a 15-minute chart, how to use price action to forecast all this stuff, okay? And I'm going to teach you the whole things right there. All right, so basically this is the overall expectancy, and the market indeed from the pullback that we forecasted move and stopped right at the tick at the forecasted price movement from one side to the other. Can you guys see what I just explained to you? We were able you create these areas. I created it again. Once again, I'm going to explain to you because it's extremely important. Let's say once again that we missed the trade on the initial breakout, and we find that the market is starting to do a pullback in this area right there. We want to know if this is enough pullback or it's going to be higher. Well, you go back in time. Once again, you go back in time and try to see where the market has tried to pull back up at least 2 or 3 times, and try to find those pullbacks and project it from those bottom formations. All right. And I'm going to do it again and again in another market. Hold on. All right. So we have an average on this area, and then we took the second one, the same thing. And this is how we created basically that area. So the blue line right there turns into basically this area that we found based on the prior movements. Are we clear on this? All right, so I'm teaching you guys here, so I need to know if you can see how we come up with the blue line. Basically, what I did is I projected this from the bottom formation right there. I just projected both of them right there, and then I took this and these two tops, and created a box. I just basically did this, okay? That's basically what I did, where these two guys ended, right? And that's That's it. That's my zone. That's preliminary. That's the basic stuff of the zone. That's the most simple way. So now I know that this is a real base resistant area. The market indeed went through it a little bit, but finally found the support that it was looking for. Now we know that the continuation should be to the downside, to the projected target. And to repeat the target, which I'm going to teach you again, I use these two pivots right there because I was considering this break. And the width of this triangle represent 33 points. There's another one in here. Hold on. 27 points. There's a trick of the trade that I do is I just add it up and divide it by 2, but basically it's a 30 point drop. So I'm saying from the break, the market should drop 33 to 30 points, okay? I use the width of the highest point and the lowest point from the triangle formation. Check it out. And guys, I'm going to show you I'm going to show you very fast how this process repeats itself over and over and over and over again in a nutshell, and then I'm going to explain you the insides of it. So there's 45 minutes left into the webinar. Let me just go through it pretty fast. So I take the width of the triangle from the break. It's going to move 33 points and find support, and the market indeed touched it and found support. Now, if I go like into a bigger time frame, it will look something like that. I don't want to change the chart because obviously it's going to spoil out if we right or not. I will say, well, I can take this as an important low, and this is a high. So this is a huge triangle formation in here of 91 points, average to 90, and they break in here, saying that if the prices break through it, the most likely scenario, remember this should be like on a bigger time frame, should drop all the way to 87. I don't know if they're going to drop or not, but I'm just trying to, because this is the most recent techniques so far. This is the most recent outcome of the market as we speak. All right. So technically speaking, on the British pound, if the market sustained themselves into this sideways slightly downward, that would be the most likely tendency of reaching eventually, probably through the process of a couple of days a week. Okay. All right. So moving on. That's how we use symmetry to predict most recent pullbacks into the market. And this is applied over and over on any market whatsoever. You can use a chart. You can use whatever it is. As a matter of fact, let me try to see. Let me try to find, I don't know. Let's go with Apple. Let's go to the 1 hour chart. Let me zoom in. Let me zoom out a little bit. There you go. So here's Apple. So you will see that this last pullback, I'm trying to go fast, guys. This last pullback that you see in here, okay? You see this pullback? Could be extremely similar. You could have been able to predict that move in terms of pullbacks I'm talking about. You know that the market is coming down and you're saying, okay, where the market has pulled back after a drop down. Here's another one. Here's one. And you will go something like so. Here's another one. Here's another one. Okay. Here's another one. And finally, there's another one in here. Okay. You're getting the point. Am I right? So basically, just makes things faster here. All of these are based, let me just put here the line. I'm going to be projected from that area. I'm going to try to come up with the closer area to all of them. And basically, I'm just trying to show you. We can see how 3 of these are pretty much close to each other. If I plot a horizontal line right there, what happened here? Can everybody tell me what happened right there? Can you see the power of what I'm saying? the market has hidden tendencies of repeating itself all over and over again. If you learn how to find them, and it's right there in front of us. This is a 1 hour chart. We use this information way before, hours, probably days before the market started to make a bottom formation, and we're saying, okay, they're probably going to pull back. We went back on time and found that all these pullbacks were created around this area. So we can create like a box. You see what I'm saying? And then move it into the future. And I'm saying, well, if they indeed are going to pull back, they will pull back between this area and they'll continue to the downside. And the market indeed pulled back into it and rejected from it. Symmetry 101, Theo. There you go. There you go, Theo. This is basically, but most of the people forget about this stuff. I mean, everybody's so focused on these new whistle, new bells, and new stuff, automatic EA, so on and so forth, that you forget that just by watching the market, they tell you exactly what they most likely will do, okay? And this was on Apple. So yes, it could be applied on anything, and you most definitely could, I mean, it's very powerful. I mean, all the stuff that I usually do, it represents the same thing. Now, let me show you something else. Hold on. Yeah, you're absolutely right. So let me show you. Once again, I'm not going to go back and forth, but let me show you what price action is and how you can benefit from all this. You will see most likely how this exhaustion are given to you by what the market has done before. If we do the pivots and we interconnect the prior highs and lows, okay, as we see here, you see there is a triangle formation right there. If you take the width of this triangle, and we're saying 148, and then let's just take this one right here, 91. So I can say 198, the market will move pretty much likely. And the market moved 148, which was this one that I just draw right here. That's 95, and this one is 125. So basically, one of the things that I do, I'm going to teach it to you right now. Once I have this swings plotted down, okay? Tony, yes, Fibonacci will help you tremendously, but the problem is how many times you try to find a Fibonacci, you don't know if it is at 38, 50, 61, 78, 78.6, 127, 168.8. You got the point? There's so many confusions of the people out there. So this is a way for you to filter out which of the Fibonacci's actually will most likely be the one who is going to be profitable. All right, so I need you to understand. Let me show you right here. I mean, this is very neat stuff. Let me measure this, and you'll see what I'm saying. It's something that I learned from one of my mentors. They don't use none of that stuff. They just use pure. They just say, what's the width of the triangle based on the higher high of a certain day, lower low of the certain day. Boom, this area. Okay, what is the area? What is the lower highest high after that day? Boom, this area, and the lowest low, this area. And they just go by the numbers. They just incredibly execute their trades without charts at all, just by the number, knowing exactly where the most likely movement it is. It's impressive. So I found a way to illustrate it here for you guys. Give me 1 second. Can everybody see me? All right. Something went up here. Okay. I think I went blank in here. All right. So, all right, good. So let me finish this idea, pretty much. And let's just see with 151, 121, 95, 151, divided by 3, average move 121. From the break should move about a 120. The market move 149. Got it? See how we can predict this move to the upside? I mean, it went a little bit further, but I used the movement of the drop. I found out, and which I'm going to take the opportunity right now to explain you about the pivot step. But first, I will teach you the basic price action. But I use this swing high, swing low, then the next swing high, which is lower than the previous one, and then the swing low, which is higher than the previous one, forming a triangle. Yes or no? You guys can follow me here? Yes? Triangle formation, basic stuff. Now you take the width of the triangle, and what are the trades that I do? I don't use it. This is something that I learned from one of the market makers. He said, don't use one. Use all the information that the market is giving you. Why would you use only one? I mean, this is being greedy. You're trying to get the most out of the market? No. Use what the most likely tendency the market has given you. And yeah, and I just did it right here for you. I took the width. I just jotted down the points. This is Apple. This was Apple, by the way. I took the swing high. I just jot down 121, and I jot down the 91 down. So 151, 121, and 90 something, 91. Added up, divided by 3, 120 something. And it's saying if they break the resistance or the support, either way, you already know that the market is going to move at least 120 in one direction. Now, if I show you right here the 120 area, you're probably going to see some kind of resistance going on, and then the market just push back a little bit. Either way, you were able to call in a run of the market to the upper side, all right, for pretty much a hefty run, so to speak. That's $11.82, something like that. I mean, on stocks, this is unheard of. If you're an option trader, guess what you could have done with this? Can you see the opportunities now? I mean, it's open up for everybody, not only Forex. But for Forex, it's extremely powerful stuff as well. I mean, you don't have to complicate your things in your life about just all the nonsense. And I do have them. I will say I do have all beautiful indicators. If you go here to the tools, I mean, indicators, and go to custom, guys, I have all this stuff. Lots of it. Lots of the stuff too. Okay, none of that works. I mean, it works, it's okay, but at the end, it's just a total waste of time. Price action rules. All right, continuing here. Now, I hope you learned something about the price symmetry and how to use that to time and confirm, Theo, which of the Fibonacci you should use. That makes sense, Theo? Price action rules, the overall normal stuff of the Fibonacci, but these guys are going to tell you, okay, you know what? Choose this one, and from all these Fibonacci, this is the most likely to go. Boom, you have an incredible system of predicting market retracements. Now I'm going to move into the, I have so much that I wanted to teach you. Best time to trade Forex, it's usually after 30 minutes, 25 to 30 minutes after the open of the session. You want the news reports to clear it out. You want the stock market to open up and take a toll into it. And then once everybody is done with their battle, then we come in and trade on with the trend. Okay? All right. Thank you, SG. Thank you. So that's basically what it is. I mean, just the way that I trade, I filter out. I mean, are there any traders here for the futures market? I'm going to give you a heads up. Futures market, anybody? E-mini, whatever. Okay. Guys, I'm going to give you a heads up. Trade after 10:15 a.m. Do not waste your time at 8 a.m. or 9:30 a.m. I know that the market moves erratically, and I know you guys look for a couple of ticks. I don't trade ticks. I trade points. I'm not wasting my time for ticks. Come on. I average 2 to 4, 5, or 6 points. Today, we made an incredible bonus trade today. All right? Yes. So options, I don't trade options, being honest with you. I do analysis for option traders. As I show you, I tell them what the most likely tendency of the market is, and they use their own criteria to position themselves in that direction. But I don't trade options, Emmanuel. Sorry for that. 9:30 is the worst. So futures traders, wait after 10. Am I okay? That's my gift to you guys. All right. Here we go. So let's see some example of that I just gave you the examples on it. So that's pretty good. And let me see. Let me go back and repair. Okay, how much opportunity and time should be to provide to you? Now, do you guys would like to learn how to create your own trading system? Yes or no? Yes? No? Pretty much fast. You gotta. Okay. All right. Can somebody type in I don't know, just type in any market that I can just find here on MetaTrader. Let's see, euro dollar. Let's just use euro dollar. Fine, it's easier. All right. So here's a trick of the trade, guys. Let me show you what is the first step. What is the first step? Niels, you're absolutely right. Nothing is consistent. That's the reason why you have to trade based on price action. You need to adapt yourself into what the market is doing and play their game. You don't force yourself into a trade. Don't. How many times you found yourself forcing yourself into a trade? Don't. Okay. Don't do it. So here's how you can start adapting and creating a trading system. And one of the things that I do is obviously the first thing is that I usually wait about 30 minutes after the open, and I need to understand the trading pair or the market that you're trading at. And we're going to be choosing someone the euro, because it's easier for me to find it here. And we're going to try to find out how much opportunity euro dollar is going to give us, and the best time from quick. So you basically open it up a chart and you go back in time. Okay, let's go back in time pretty fast. It doesn't matter where we're going to stop. Just go fast over here. And basically what I'm going to try to do right now is jot down on a piece of paper the highest point and lowest point. Highest point, lowest point. Highest point and lowest point of the euro dollar. Okay? This is a 1 hour. 1 hour. You do the same thing. Listen to me, Fabio. You do the same thing on the specific time frame. You're going to be doing the basic analogy from. So if you're going to analyze the market on a swing trading based, obviously you're going to be like a day trader and holding a position a couple of days. You're going to be doing this on a daily chart. If you're going to be doing this as a day trader, do this on a 1 hour chart. So when you execute in the 50-minute or 5-minute chart, you already know. I'm going to show you right now. So basically on the euro dollar, here's an example. I will jot down. Okay, I notice here that the euro dollar took a high and low and moved at an average of 59 points. Then move up about another 57 points. So it's an average of 55 points. Then the next day, they move up from top to bottom, 81 points. The next day, looks like a report came out, and the market came down before the first pullback and moved about 72 points with a total of 114 points. The next day, and here's where the ADR comes in handy, if this guy's moved from up to bottom 121, most likely this swing should be close to over 100 points or so. 94, pretty much close enough. Okay, so basically I start jotting down the high point and the low point. Okay, yes, Grace, this is going to be recorded, as they say. So high point, low point, and you jot it down. And you keep doing this for at least a month. Go back 30 days back. Low point to high point, 58. I'm going to see if you guys are fast enough getting the idea of what I'm doing here. 45. Next day, sideways situation. 57. Can somebody already tell me? This is news reaction. I'm not going to count that. News reaction, news-driven reaction. I'm going to count the prior to that one, 42. This is news-driven. Not going to count. I'm talking about pure price action. From low to high, 34. From high to low, 56. What is the average range for the euro dollar? Everybody, let's just be quick. I got about 30 minutes, 25 minutes left. How many times? How much? 50. There you go. SG, you got it. Yes, Neil, you can do that. You can do it. I'm trying to teach you guys how to do it manually. Yes, absolutely. All of this could be automated. I don't have anything automated. I like old school. I like to make sure that I don't rely on anything because sometimes I being on vacation, I just borrow a computer, check the charts, do the whole thing, and be able to do my stuff. You see, I don't have to be glued into my own personal stuff that I got at the office. There you go. So let's see, 50, 55, 50. What is the average? What is the average, everybody? Come on. The average would be 50 to 55 points. You got it. So now we know that if you're going to be trading euro dollar, all right, Fabio, the difference is that is a difference because what's going to happen, let me see if you follow me here. What's going to happen, did you see that I did not count this move? Why did not count this move? Why did not count this move? Anybody? This spikes. Why did I couldn't count them? There were news, exactly. So those are news driven. Fear and greed is taking possession. It's just going to take out the analysis out of the way. So we already know that the pure price section on the euro dollar is about 50 points. Now, let me give you an example. If you're going to be trading euro dollar at the opening of the European session, how many points do you think most likely you will expect from now on the euro dollar every time that you trade? A total of how much the market will move? 50. Now let's be true and honest. How many points out of that do you think you're going to be able to take out of the 50? Will you be able to call the top and the bottom? Of course not. So you got to cut it in half. 25. There you go. 20 to 30. There you go, guys. Now you see the whole thing. Can you see the perspective? Now, can you then apply your trading style and idea saying, okay, I'm going to be trading this market, choosing the euro dollar in this case, and I know the average is about 55. So I'm going with my trading strategy, whatever that may be. And I know for a fact that once my trading strategy, listen to what I'm saying because I'm limited on time. Once your trading strategy gives you the entry signal, I'm going to show you mine though. Based on that entry signal, let's just say, just take an example here. Let me try to find something. Okay, fine. Let me just say that I have the pivot step in here. Okay, and just put it in there. Just as an example. If they break the support line, here's just give it an example. They break the support line. I need to cross of the moving average, and they did cross of the moving average. Break down. This is my entry. Now check this out, guys. That's what's my entry. Let's just assume I went into the close. You following me here? Yes? Yes? Right there. It broke, it closed, across the moving average. That's my entry. My stop loss is over here. Now, here's what I think. Okay, here's a euro dollar. This is what I got in based on my system. And the market has moved 49 points from the top. How much points left do I have based on the average true range that I know that the market still have? 50. Was this a good trade or not? Was this a good trade or not based on what we know? 5 points. No, of course not. You see how this happens? So zeros left. There you go. Now check this out. What I taught you earlier. Now listen. No, we did not place a trade because we already knew this is my entry. That's my stop. There's not much left. So what can I do? Well, let's see. Two things I know. Let me do my pivot step. Okay. Let me do my width of the triangle. It says 59, pretty close to the same thing. And 56. All right, it's pretty much the same thing. Let's just do 50. From the break of the triangle, we got 50, which means that the probable move is going to be 36.05 based on price action. 36.05, 36.05. There you go. Based on price action, it's saying that it still got about 30 points. But based on what the real true range of the market, we still got none. My best bet so far is saying, you know what, they're probably going to reach it. It's going to take a while. I wait for what? We wait for what? What do? What we did earlier? A pullback. Remember the pullback? Let's go back in time and say, okay, every time that the market went down, here's a pullback. Let me go back in time. Here's a pullback. Let me go back in time pretty quick. That's a big one based on news reaction. So we do, well, we can maybe use this one, the most recent one. Yes, we can use that. So let's say, just mark that. Let me see if we can pull this up or not. There you go. So I'm saying, okay, there's a pullback. That's a pullback, pretty much close to each other. And this is the third one, pretty much close to each other. So I'm saying, well, it looks like that if I want to really position myself into this trade, if I already know that I'm not going to be selling there. Why? Because it's already moved most of the amount of the average trend that they move. I wait for a pullback back to the 36.61. Take a look at this. The market reached the target first that the price action did and gave us the pullback. Okay? Gave us the pullback. And the entry of this trade would have been at the low of this bar right there, which was never triggered. See? It was never triggered. Market got into the zone, came back down, and it closed below that level was supposed to be the entry. Eventually, guys, look what the market did. It took a while. It took a while until it hit our entry and the target was finally reached. It's all about based on patience. And we took about 20 to 25 points. It took, what, hours for us to pull this trade off. All right? This is how you're supposed to trade. Patient, discipline, and understand the market. That's the only thing you need to do. First thing, understand the market. Guys, take a look how we call the pullback. Did we use any Fibonacci's to know this was the pullback? Abby, I got it. So you see how powerful we can call this price action pullbacks just based on what the market has done before? I mean, Remy got it. All right, so you like so far? How do you play it out and create your own stuff? All right, so to call up this pullback, to call up that pullback, all right, I use the most recent pullbacks that I could see. I use this guy right here, this one. I use this completely one from this bottom to this top. Yeah, I usually do. I do apply other techniques more advanced, but based on price action, this is pretty much what I do. Here's another pullback. Theo, you can do an aggressive one? Yes. Remember, this is a 1 hour chart, but I wanted to completely show you how price symmetry combined with the price action of the symmetry with the price action of the triangle formation, the price, guys, the price action, the chart tells you what they want to do. They say that if they're going to move, they're going to move an average of 57 here, 59 there. If they break, they will move about 50 something points. And it did. Look, the market moved about 50 something points. You see it? And they found support. We knew about that. It's just the fact that when the market gave us the entry, we could have, once again, and we use other criterias because probably in the 15-minute chart, this looks like a strong downtrend. We could have played out, as you said, a little bit more aggressive and just take that 20 points. But right now, based on what we learned on the euro dollar, how many points we already know the euro dollar usually provides to us? 50. Now, from now on, you already know that based on that, you can compare it with the price action activity and use this swing stuff, which I'm going to try to explain to you how to use it in the last 50 minutes. It's not big of a deal, it's easy. And compare it, okay, based on the actual entry and where the actual projected target is, we still have enough space to collect about 30 points. The question is, based on the high, the market has already moved from our entry, and I was just assuming, once again, I was just assuming that was our entry. I'm pretty sure that on the 50-minute chart, our entry would have been over here, right, a little bit further up. Do you agree? I mean, I'm not going to change the charts right now, but probably it's going to be a little bit higher, okay? So probably halfway through, we already know that probably was going to provide it anywhere from 30 to 44 points from that entry based on a lower time frame. This is when we combine the analysis, as I talked to you earlier, go to the 1 hour chart, do the analysis, and execute in about 50 minutes, so on and so forth. All right, so What gives you your predictive indication that each of those pullbacks won't be just a spike and retrace and a dead cat? Well, option profit set is your name. That's cool. That depends. All right. Then I use something a little bit more advanced in the futures. Yes, but that's what we do. That's what we do every single day. Yes, on my private room, I analyze the market and I provide those top and bottom areas informations. Okay, that's basically what we do, and we played out the. Basically, what I'm trying to teach you is create a blueprint of what to do specifically on the markets. That's exactly what we do on ForesightFX every single day. I create a daily video on 4 pairs, providing these areas of high probability. Does those area really reach every single time? No. And then we, instead of, let's just say, we're probably going to have the area in this higher ground, and you notice as the market doesn't reach that much. Basically, we use what I'm going to teach you right now in the last, the pivot step, meaning, all right, so the pullback is here. I'm going to use the 2 lower pivots as support, and I plot it out like that. And if we failed to reach the expected reversal point, we're not going to miss out on this trade, because as soon as they break this support and they confirm with the cross of the moving average, we're going short. We place our stop beyond that pivot high and run the remaining expectancy of the market. Okay. Take key. Hey, Tiki, thank you. Ah, all right. Thank you very much. I didn't know you were following for years. All right. Martin, yes. My secret to simplicity is the cross of the moving average on the 8 exponential. You guys use that, and 34 exponential. That's one of my mentors taught me that. That's not. I wish that was mine. It is not. Period. And it's been the most effective thing that I use so far. So the trick of the trade is combining the system. All right. I don't trade it just blindly. And I suggest don't you ever freaking trade on something that it tells you go in, go out. Every time that you have a system, technique, a strategy, an indicator, whatever it is that you use, do not take that trade blindly. Confirm it with something else. And I'm teaching you the most powerful confirmation strategy ever that you can apply it on anything that you use, guys. Okay? That's what I want you to do. Basically, this is kind of a little bit weird. Let me go into something else. Okay, let's just find this bottom area. Okay, this is a bottom area. Let's just say that we are assuming that the market is reaching a bottom formation in this case. Okay, so one of the things that we do, it's powerful enough. Pure biz, no, it's 8 and 34 EMA. Yes, thank you, Theo. So let's say that I'm finding a bottom support here, and I'm looking for an opportunity. The first thing that I need to do is wait for the cross of the moving average. I'm on a 1-hour chart. Follow me here. Follow me here. And this is how it is. The reason that I'm choosing this, because you're going to find out that we're going to be losing for a while, but most likely the perfect entry based on price action was the perfect execution in terms of decision. So here comes across to the upper side, and I need to make sure that they're just making new highs, and they did. This was the lowest low. The market came up, down. This low did not took the previous low, and they took the recent pivot high, meaning that this is a new tendency to the upper side, backed up by the cross of the moving average, meaning, once again, this is from one of my mentors, that would be pretty much close the entry of this position blindly. Yes, and I said blindly. I'm talking about showing you the technique, the entry technique that I use. Okay, guys? So basically, let's say, okay, I went long right there. Where should I place my stop? Very important. Obviously, I usually go about 15, 10 in the Forex market. I learned that we usually go about 15 to 20 points. I always choose 15. 34.60 around average. That's going to be our stop loss right there. Okay, that's going to be our stop loss. And then I said, okay, so I went long and the market start going sideways. Does the market has already hit my stop? No. But where is it going? How far up they're going? All right. Jamie, thank you very much. Man, I'm trying to squeeze in a lot of years and time here in whatever I have. So basically what I do is take a look. I'm saying, okay, I went long here. Here's my stop. But what the heck are they? I don't know where they're going. Yes, you do. Okay, here's the most important pivot. Basically, this is just one huge fat pivot. And then this is what I went long. Okay, so I'm going to use this high. But I'm looking to measure what? What am I looking for, guys? I'm looking to measure the width of what? Of the triangle, right? So I'm saying 93 points. And I'm saying, okay, this is what I got. And this is where they broke this trend line, this resistance line. There you go, triangle time. I like that one, Theo, triangle time. All right, so, all right, from this, they're supposed to move how many? How many points was it? 93, right? 93, 93. There you go. Here it goes. 36.14. Put it right there. Buy the tick. See, here you go. We made this one. And basically, this strategy that I'm using, very complex, difficult strategy, says, okay, this is pretty much a bottom formation. And let's say that I was expecting it. Use your own criteria. We teach something else on ForesightFX. But all right, this might be a bottom. Obviously, they don't want to go down. And that was across of the moving average for that Carlos suggested in here. So this was pretty much our, well, actually, this was the cross of the moving average. So this was pretty much our entry right there based on the cross only. But if we would have used the pivot step, the actual entry would have been this guy, which is pretty much the same price. So no, I don't use volume at all, Fabio. No, don't use volume. All right, so we're risking in this trade how much? We're risking 68 to gain 87. So let's see what happens. So that's the cue to go long, and this is a target. Probably gonna get stopped out, and boom. Guys, can you tell me here if I made up this? Oh, come on. Just, can you see this? Even, I mean, I don't trade news report, fortunately, but even on news report, does the market here, I'm going to repeat this again. I use this pivot, second pivot, width of the triangle. How much was the pivot, the width of the triangle? Let me put it right there. 96. Buy the tick, Jimmy. Yes, absolutely, man. The break of the triangle or resistance point, we call the pivot step, which we provide every day on the, we'll teach you very in-depth this on ForesightFX. That would be the cue to go along. We did. Fine. We're risking 60 initially. It doesn't mean that we're going to keep our stop there, but basically we have to. The market gave us about 31 points just before even reaching the target, but the target was right here and it was 93 and the market reached it. And based on price action alone, it tells us where the most likely tendency for the market to reach the potential resistance point would be, and I cannot explain it even better anyway. Fabio, I'm telling you, this was pure luck. I was not expecting for this to reach, but forget about it. Look at the market, what did. The market came back and stopped right there by the second time. Okay, so you got the point. I said it. I mean, I would not be able to trade this on news reaction. All I'm saying is, and we cannot argue about this, price action over here gave us the tendency of the most probable projected move if data indeed moved to the upper side. See how cool? I mean, come on, it's simple. I'm not trying to come up with this stuff. It just, all I'm saying is any market, guys, that you're going to trade in, stock, whether being stocks, futures, Forex, the price action will dictate exactly what the most likely tendency into the future would be. It would be, you cannot argue that it would be absolutely beneficial to have these levels marked up before taking the trades. Okay? Yeah, exactly. Then you just made it faster to hit the target. You're absolutely right. So let's see what else did I have. I just gave you example, and basically the simple trend lines breakout, support and resistance, which I explained to you, price analysis and warnings, triangles, and sideways channel, which is what I explained to you in the sideways channel, the same thing here. The objective, obviously I show you that, hold on, the profit take for a couple of times and combine that on the, if you're trading on the 1 hour chart, suggest to execute on the 50-minute chart. All right, so yeah, time is coming up. So basically, this is just an example of how to use simple indicators when you combine the analysis of the price action. Then you can apply any indicator whatsoever that you have. I use a MACD. You can use whatever. I have our own exclusive design one. It's not magical, period. It's not something magical. You can use whatever MACD you have, but I do have designed a MACD that looks like a stochastic, but is a MACD. And here are the parameters. This is my gift to you. 8, 50, and 9. Just plot it. And basically, when the when the action line crosses the histogram, most likely the tendency bias is to focus yourself into that direction, to the upper side. And when it crosses to the downside, it's the same thing to the downside. Okay? It's just do not take the trades. It doesn't mean that if they cross, you're going to buy. Come on, don't do that. If they cross to the downside, don't sell it. I'm just saying, they cross to the downside, it's giving you a warning signal that is beneficial enough for you. Here it is. Just around this time, the MACD by this time was warning me of a potential bottom formation. It doesn't mean that I'm buying. It was just warning me. And then I can just execute what I just showed you here, because I'm saying, okay, it looks like the momentum is dying out. Then I try to find some indication that the momentum is really dying out. And then I just execute what I just showed you here. Okay? Easy? Very, very cool, very fast, very easy. It's most reliable on the 4-hour chart, pretty much reliable on the 1-hour chart. Lower than that, 30, you work with it. I mean, I cannot teach you. I just use it on the 4-hour chart, but keep it simple. And this is usually take about 5 seconds on the 4-hour chart, what I can say, oh, it's above 80. The thing is that here's the MACD, the way that we use it on ForesightFX. I plotted the 20 and 80 level just like it would be a simple stochastics. When it's reaching the 80 level, it's warning me about the overbought conditions. When it's below 20, it's warning me about the oversold conditions. All right, if you move it around, it will sometimes change, but most likely won't. I mean, once you already know, you just need to glance it and say, I mean, like in this case, oh, these guys are going into a potential warning signal. Take a look at this. Let's see. The market just reached the target and it's hitting the 80 level. So it's warning me that indeed that target is going to hold the market pretty much heavily, and it did. So it's just a basic strategy, a very easy. We go in depth and we give you access to it on our on ForesightFX. Okay, all right, guys. So I hope you learn a lot. I mean, this is not selling. I'm just trying to give you a heads up. If you learn what I teach you today, I try to squeeze as much time as possible information. So if you like what we had, we go overextend. I think we got a couple of 100 videos on our video vault, because I created daily forecast video on British pound, euro dollar, Japanese yen, and the Australian dollar. And sometimes, I don't know, the mojo hits in, and some videos are as long as 30 minutes, 25 minutes, because I really hit hard on teaching what I gave you at a glance in here, step by step over there. And on this webinar, if you really love what I try to teach you today as much as I can do, you can definitely benefit from a 14-day trial that we have for $7 only. All you have to do is go to ForesightFX, plainandsimple.com, read what we have, and definitely benefit from a real in-depth opportunity that we have. It's just $7. It's just less. I think I spent $8 something on Starbucks the other day. But anyhow, $7 is nothing. And it just has to be because our system requires to be charged something like that. But the point is, it's a pretty cool. You're gonna I will guarantee that if you learn something of what I taught you today, I cannot believe how much you're gonna love what you're gonna learn on all the incredible amount of information that we have there. Theo, thank you very much. I know I'm a beginner on this type of presentation in front of 370 or 400 people or something. Thank you for the time you put up with me. Once again, I still have 7 minutes left. You got any quick question? SG, no, futures is totally different. I have a different site. It's not kind of a business yet, but I do have a site that I provide information. I put some videos on how I day trade in the E-mini over there. I do have a trade, Luis, I do have a trading room, but it's only on the futures market. On Forex, let me give you the best insight so far. Forex trading is very lucrative, very difficult to trade as a day trader. I mean, you can work on it and you can make quote, a very nice amount of money. Truth be told, the bigger players traded on long-term trades. I mean, long-term charts, 4 hours, 1 hour. All right. No, don't worry about it. So, Jamie, thank you very much. I hope you really learn. Yes. So basically, yeah, that's a benefit that we're offering. Just go to ForesightFX, and I mean it's cool. You're gonna see me. You're gonna receive every day a full video. It's pretty lengthy sometimes, and I analyze the market live, and you learn. It's actually a teaching process every single day, every single day. Sometimes it's just saying, I plain and simple, I'm going to be very honest with you. Plain and simple, sometimes I say, today's no day trade, period. We're done. No other than that. So that's basically what we have, okay? And I mean, sometimes most of the members love the idea that I'm very honest in saying, hey, I mean, I'm not creating a trade where there's no opportunity in the market. So sorry, this is not a casino. So basically, I stand outside of trades when they're not comfortable. And sometimes altogether, we trade 4 pairs. Sometimes there's no trade at all. So we stay out. And I take the opportunity of on those days, to teach even more in depth what I just taught you here. Luis, afterwards, just $97. You get access to all the full blown. I mean, I don't know how many videos we have. I pretty much close to hundreds. Keep going. The video bolt is long. It's a lot, and I got a lot of. There were days that I just hit really hard on streetwide money management, meaning how to trade your account based on price action, not of how much money you have. Yes, I do have a lot of training videos for beginners. I teach the pivot step system, which was the basic of the entry formation that I show you here. Very in-depth how to predict market movement, just like I taught you today. I basically taught you the whole thing, but I go very in-depth over there. Frank, thank you very much for that comment. I really appreciate it, man. Thank you so much. Okay, which are you prefer 4 pairs? Euro dollar, Japanese yen, British pound, and Australian dollar. I like euro yen, pound yen too, but it's so the video vault is only for the full members, all right? But you're able to see the daily videos anywhere for the next 14 days, which I don't hold back anything on the training videos. I mean, it's just that those videos just are move on into the vault. So if you happen to get me into what I said before, into the mojo, you get to learn what I teach on those days. I mean, we got members for about 5 years now. Hey man, SG, thank you absolutely for that comment. Yes, we're trying to be very humble, and in terms of, once again, I try to do my best here. Appreciate it. You hire engineer to do machine learning to no, Philip, no. Emmanuel, I understand that. Unfortunately, it just we teach so much, and I sometimes teach so much in those videos. There's high-paid courses that I teach, mentoring, which we're not going to be talking about that. That's not the point. Some of those videos has access to those training as well. So, it's just a matter of. All right, so I got 2 more minutes. Chris, you can start anytime you want. Really, it doesn't matter. Alex, I do have a mentoring program on the E-mini SMP that, as we speak, we're planning into rolling out now since people are really into following. I do have a very small week trial on my trading E-mini. If you are a E-mini trader, you contact Jimmy here, or contact me of daytradingtheemini.com. You can go there and find it, but preferably go to Jimmy. Jimmy, if you can put your information as well, appreciate it. And I'll set you up because my system is not set yet. It's not set yet, but I'll set you up for a free 1 week trial on the E-mini SMP. It's a very closed group. I don't take dozens of people, less than 20 sometimes. It's very not that. I mean, okay, SG. Well, contact me. You can contact me as well. That's my email. But Jimmy will be there. Jimmy at ForesightFX will be the best coming up from this presentation. Okay, and then we can talk about the E-mini stuff. It's a totally different ballgame. 38 seconds to go. I want to thank you. Oh my God, Trading Pub, Yana, and the guys at Trading Pub. It's amazing. First time here, and I mean, I really thought that I would blow your mind away in the amount of information in such a limited time. Thank you very much. God bless for the opportunity. Hope to see you probably into the future, right? Appreciate it. Thank you, Kirvis. Thank you very much. Adios. Okay, hablamos después. Yeah, I'm full bilingual. That's actually Spanish is my first language.